Welcome back. In this video I'm discussing a couple of my holdings, namely Futu, Huami or ZEPP, and now also Xunlei, because they just announced their earnings. So I'm talking through what's new, why I invested in the stock and what has possibly changed, and in the order of least excited about the outcomes of the earning towards most excited about it. So watch it till the very end. And as most of the time, I've already made a Patreon post about my take on the earnings, for instance on Huami, and also the outlook on the Futu, Tiger and XNET earnings. So make sure to subscribe and become a patron if you want this early access. And now let's dive into Huami straight, because that is actually frankly the one where I was least excited about, to be honest. I think the earnings were kind of okayish, but not really what I was expecting. So first off, the good news, the stock didn't really tank after earnings. Usually it has this history to be really bad after earnings and selling off. That didn't happen this time. And I think this time the sell-off didn't happen because Huami actually was beating on the earnings per share. So the actuals this time have been better than the estimations by Wall Street. And as we know, for instance, with NIO now, Wall Street pretty much is looking at the EPS mostly in order to for the funds to scale in or scaling out, and that's moving the share prices oftentimes after earnings. So NIO missed on EPS, and Huami or ZEPP here actually was beating, although the revenues was a miss. So let's have a look at my personal estimations, and going into Q4, here you can see my estimations. I was actually thinking that we could reach 390 million of revenue, so a nice growth from the actuals, 329 million of revenues in Q3. I also hope for a rebound in the gross margin of 26%, and my estimation also was that we actually have less operating expenses consisting of, for instance, research and development, SG&A, general expenses and so on. But the opposite was the case. We only had 302 million in revenues in Q4. We had slightly lower gross margins of only 19% compared to Q3, and we even had higher net operating expenses here. So all of this is obviously not positive. The only thing positive here is the net income, which was 17.7 million, although I was actually expecting a bigger rebound to 27.3 million, because if you compare it to, for instance, 2019 Q3 and Q4, then we averaged back then at around about 30 million or even more than that in net income. So you can see that 2020 overall wasn't a good year for Huami and ZEPP in terms of the business fundamentals. Revenue wasn't growing as quickly. Now we are at a year-over-year change of only 12% growth, and at the same time most of the important KPIs like the gross margin coming down from 27% all the way down to 19% and so on. So here, to give you just a better visualization, you can see in 2019 we've been growing to up to 300 million in revenues. Then we had a drop, which is mostly seasonal, but also obviously affected by COVID-19. And then a nice scale up into Q3 2020. But now also a quarter-over-quarter decline in the sales. So that comes unexpected for me. I was assuming that the Christmas break and also the Double 11, a big shopping holiday in China, would be a boost to the sales overall, and not so much impacted by actually lockdowns and COVID-19, with a strong China market and also, maybe some online sales for ZEPP brand, but also the Amazfit brand in overseas markets. Now, regarding gross margin, this is also a concerning picture here when you see that the overall gross margin is just going down over time, now at 19%. And the management blamed actually that this is according to the Xiaomi sales. So the Xiaomi sales haven't been as strong, and possibly they also needed more discounts in order to get the products out there. And thereby the margin that they make on the sales of each product has actually been in decline. They said that their self-branded products were actually doing quite better. And this is one of the highlights for them, that in 2020, their branded brands like ZEPP now and also Amazfit brand, These are the ones that are doing well, growing more than 20% year over year. So ZEPP here is becoming less dependent on Xiaomi if you want to take the positives here. On the other hand, even those self-branded products, they don't seem to really limit this drop here in a gross margin. And yeah, that's a concerning picture here. But on the positive side, this is what Wall Street really liked here about the earnings, is that the EBIT margin is recovering. So in the end here, ZEPP is kind of recovering on their profitability with the low in Q2 and now in Q3 also showing the first turnaround and obviously continuing that in Q4. So now as a kind reminder, the gross margins and also frankly even the EBIT margin don't really matter to me as much. So let's zoom a little bit out and talk about what this actually means for my investments. So the reason why I invested in ZEPP is, number one, I thought this is fairly undervalued here. The second one is that I think it was great opportunity here and very well positioned in order to capture a good piece of the pie of this healthcare opportunity in China. I was looking specifically for one company in that field, and with the three pillars of ZEPP in the area of wearables, smart devices, the area of using data for an advantage in the industry to, for instance, offer services like their own insurances or helping other businesses to make use of the data. And the third one is the new field of the industrial medical healthcare sector. So these are the big three opportunities and very large markets that I see that they can tap into. So those haven't changed really. But obviously, if you look here at my napkin business case, I was much more bullish on the Q4 in terms of a turnaround for ZEPP and Huami. So I thought, well, maybe this could actually be the first catalyst that this company is finally perceived by investors for what it can actually unlock in the future, and that clearly didn't happen. So I have to put out some question marks here in terms of, is Huami and ZEPP really this growing company? Obviously here the revenues decline, well, despite yes that there is a problem with the lockdowns overall and so on, but it seems that they are really struggling here in terms of growing their business overseas, but possibly also in China, with Xiaomi being a little bit weaker here. And second of all of the other catalysts that are mentioned with those new business ventures that they can tap into, they are quite, at least a couple of months, if not years out there. So the bottom line here would be that this quarter doesn't change much for Huami on the fundamentals, but it clearly also serves not as a catalyst in my views, because now we first have to go through a possibly weak, seasonally weak Q1, seasonally weak Q2. So where are also the catalysts for propelling the stock price in the short term? This may be a patient thing here for investors that are currently invested in ZEPP as I am. And clearly, yes, the big picture is there, but in the short term, I'm not sure if this stock can really, explode based on what we've heard in the earnings call. And maybe there is not so much pent-up news right now for the stock to, make some big moves there. So this also kind of reflects in what I'm looking to do with the stock. I'm possibly just holding for it. I'm not looking to sell on it because my average price is around $11 a share. And I see this big upside, as I mentioned in my last videos. I think this stock is currently still undervalued. I think if it catches up with competitors, it should be valued around $60 a share. And then we have all of the future revenues coming in 2021 with hopefully the insurance business, and in the next year, 2022, also the industrial medical health on top of that. But unless Wall Street also sees those revenues coming in, I think, well, not sure if they're going to change their price targets and also the valuation of this stock. So that might be, kind of a slow stock for now. So in the end, in a nutshell, for me, this is still a long-term hold and a long-term opportunity because I think there's just so much potential. In the short term, not too much to expect from this stock, and some question marks actually around the topic, how well is ZEPP actually executing on capturing bigger sizes of this overall market, which is growing. So we will see that in 2021, how well they can continue to execute on this opportunity. Now on to the next stock that has just reported earnings, and that's FUTU Brokers. And I love this stock because I actually invested around here. but now this has already run up quite a bit, and it's a super volatile stock also recently. And as mentioned in my last videos, this is actually one of the positions that are actually sold out completely. And this is something which I rarely do, because usually I'm this buy and hold investor, and I have this view that you shouldn't try and time the markets. But in the current correction that we have on tech stocks in general, this was a great opportunity to take some profits before we have a major correction in the stock as well, and use those profits and hopefully invest them somewhere else in order to have better returns on the future, and also aligned with the fact that I think that Futu kind of reached already my personal valuation target for the future. So I think it's time for this stock to cool off a little bit. But still, today they reported the earnings and they have been great. An increase of 160% year over year in the paying clients. This has been a breakthrough year for the stock and for the company. Total revenues in the fourth quarter also once again up year over year 281% to 153 million. Net income up to 68 million and so on. So everything's looking great for this company. And I'm a fan of the management, and the product seems to be really well perceived by the consumers in China. But just looking at my napkin estimates here, I was looking at a share price of $210 more or less in 2023. And the fact that we almost been there this year, this tells me that this has been running up quickly. So I think the better opportunity right now, although it is possibly the riskier stock, would be TIGR Brokers. We still have to see their earnings next week actually. So I think Tiger, although they're running a little bit in sync here, has possibly right now still more of the upside, to be honest. But as also discussed previously, I have a smaller position in TIGR Brokers than my initial position in Futu, and also trimmed the TIGR position down a little bit just based on the fact that this is the more risky stock of the two. It has a lower valuation, and also there are some question marks about some board members that are shared with a company called GSX Technical Education that has some short seller allegations. So you always have to be careful about investing in Chinese stocks because there's not so much transparency. So I reflected that in my personal holdings of this stock as well. But in terms of the valuation, this still should have more upside than Futu currently. And maybe because both of the stocks have been growing quite nicely, they need to maybe first calm down a little bit, consolidate for a while. And usually that's what they do after earnings in my experience. So for both of these, I would personally not buy them right now. I may buy back into Futu when it has been consolidating for a while, when it has found a solid new fundamental. And for Tiger, possibly also pretty risky if you get into it right now, but holding for both, personally, I wouldn't mind that doing. And regarding selling, well, personally, I am not a big fan of actually trying to time the markets once again, but in the case for Futu, I actually did that. Maybe I'm getting punished on the markets for doing that. You can already see today that first with the earnings, the stock gapped up plus 10%. But now it's really coming down a lot, and now we still seem to be in this overall downtrend here. So even those great earnings couldn't really help the stock to reach new all-time highs. So yeah, in my point of view, a new support could be around $140 a share in the beginning, and then possibly even maybe later on around $120 if it will have a steeper correction. Now, last but not least, the company and the earnings we have been most excited about today is XNET or Xunlei, and they just reported the first profitable quarter. So, and if you follow the channel and my first video on XNET, you know that this is a speculative position. I haven't done tons of due diligence on this stock, but the fundamentals looked really good for me. And the reasons why I invested was, for one, similar to ZEPP, that is really a low valuated company, and it's looking solid on the fundamental side. So they have revenues, they have earnings, and now for the first time also the Q4 was profitable. And on top of that, I think it's an interesting overall market position to capture an interesting space, namely here the cloud services businesses in China and also the blockchain technology as a service business. Now, the reason why I took this speculative position just as an entry in order to do my due diligence later was because I thought, well, for one, they possibly may in 2021 show a growth in revenues and also return a profit. And that's exactly what has happened now with Q4. So now they reported positive earnings and also an overall revenue growth, I think around about 20% in most of the services that they are reporting. And that's really the great news that I was hoping for, because that should really support the fundamental stock price in the future. And I'm actually going so far in saying that this could be the start of a rally similar to what we've seen in Futu and Tiger. So as you can see, what I posted here, the fourth quarter showed revenues were 50 million and up 15% from the previous quarter. They had growth in the cloud computing and subscription revenues, and also in the area of online advertising. So these are the main revenues that they're currently having. They're also working with, for instance, some universities in the area of the blockchain technologies, and they have actual projects already with companies in China where they make the blockchain kind of usable, because this is also one of the main reasons why I invested in this company, because I was looking for companies that are actually building stuff in the area of blockchain technology that are investable, also prefer to be in China, and yeah, maybe not in the Bitcoin market, as I'm already exposed to Bitcoin with my Bitcoin holdings and also my investment in MicroStrategy. So the current business fundamentals in Q4 as well as the outlook is actually really moving towards the direction that I anticipated, so that's good to see. And also in the earnings call, which I listened to, they told us that they are now going to announce more news about the blockchain services that they're working on, and some more updates on the video streaming services that they're offering. So these are maybe also some short-term catalysts that are waiting for us. Plus, on top of that, I expect that now we see new price targets that are more favorable for the stock price here. As I mentioned before, this company, if you deduct like the cash position which they have from the current market cap, which is slightly above 500 million, and have more than 250 million in cash, so that business is essentially just valued at around about 250 million US dollars, and that's currently their annualized revenues, if you will. So that's just trading at 1x price to sales ratio here, in comparison to similar competitors overseas like Fastly or Cloudflare and that, which are trading at 20x. So if XNET would actually catch up with some similar valuations here, that would mean that would be actually a 20x from here. I don't think that's very likely to happen, frankly, simply because it's a smaller company. It's not hyped up as the other ones in that field, and not many people are understanding China. And well, XNET also still needs to prove a lot that they can continue to have this revenue growth, because frankly, in the last couple of years, they haven't been growing. Instead, they have been declining the revenues. So this turnaround is practically just happening right now. But what we've seen with, for instance, Meituan, with Tiger, with Futu, as soon as they have shown some profit only on a quarterly basis, that was really reflected in the share price later on. And just simply based on that, I am actually expecting that we should actually see a rally in the stock price from here. But should you consider in investing in XNET, be careful about it, that this is a super volatile stock. It's also, despite the fact that they have a good cash position now and they're low valued and that they are now having even positive earnings, that doesn't mean that this stock cannot, really fall back down a lot. So be careful, do your own due diligence. None on this channel is actually financial advice. I'm just showing what I'm personally doing. And currently I'm long the common stock. I have also some short-term as well as long-term call options on XNET. So generally, yes, I have built my position already, and I'm not currently looking to add much more in the next couple of weeks. But I just want to ride out this, hopefully, growth in the stock price from here. So okay, this is the news so far regarding the earnings for my 3 stock picks. I will keep you informed on all of the 3 and what I'm actually also doing with these stocks. And just be aware that the market is not always reacting like we are anticipating, meaning that, well, if the earnings are great, then the stock goes up automatically. Sometimes it takes a couple of even weeks or months for the stock price to digest the news and the fundamentals. What I always think is the important thing is to look for opportunities that have some really large opportunities in front of them, and then hopefully get in early. And when it's low value, that also means lots of risk involved usually, but then grabbing onto those opportunities and have diamond hands and riding it out until hopefully the investment hypothesis plays out, and then not chickening out if, for instance, we have a correction. But in terms of that, if something of the fundamental thesis in a stock has changed, then also don't hold on to losers. That's what I'm trying to do as well. Sometimes I'm failing with that, but well, that's what I'm trying to do and documenting it here on the channel. Anyways, that's it for now. Thank you guys for watching. I hope you give me a thumbs up, and then see you in the next one.